Hello, good morning, good day, everyone. For those who don't know me, my name is Audrey, and welcome again, welcome to EASTAFRI TV. What we're gonna be talking about today. This is gonna be a very quick video, so for you guys to know very important information about five top mortgages financing banks that you can get right here in Canada, and how can you buy your first home very quickly. Yes, that's the video for today. Again, my name is Audrey. I represent EASTAFRI TV, and I'm uh, EASTAFRI consulting owner as well. We do finance, real estate, and technology as well. For those who don't know me, my name is Audrey. I'm from Burundi, born and raised from Burundi, and currently living in Canada. Welcome to my channel. And if you haven't subscribed already, do so. Subscribe right now, because EASTAFRI is here to advise you with the best information that you can get out there on the market without having to do or put in much effort. All right, what are the five top financing banks for your mortgage here in Canada? Number one, I'm gonna read it. It's gonna be RBC. The Royal Bank of Canada is the largest market share holder for the mortgage. He holds approximately 21.7% of full range of fixed and variable products, especially on a mortgage. So RBC is the number one. So if you're looking to get your mortgage, you know where to look. It's RBC's number one. Number second, number two is TD Bank. TD Bank ranks number two in terms of the company that can provide you your mortgage with good rates. If you're looking for variable or fixed rate, TD Bank can do so as well. So number one is RBC. Number two is TD Bank as well. And we're talking about number three, the third bank that can provide you with a secure, good product on a mortgage. It is Scotiabank. You can get your mortgage from Scotiabank as well. So number one, it is RBC. Number two, it is TD Canada Bank. And number three is Scotiabank. All right, what is number four? For those who don't know, number four is CIBC. CIBC. Again, EASTAFRI TV is here to give you the information that you need without you having to put in much effort. You can find everything that you're looking for right here at EASTAFRI TV. We talk about finance, we talk about technology, and we talk about real estate. Whatever you need, EASTAFRI is here to give you all those information, provide you the information that you're looking for pretty much, right? So EASTAFRI is here for you guys. That's why if you haven't subscribed already, support the channel. You can now comment, share, and subscribe. In this video, I'm going to be talking about how you can even buy your first home very quickly by using some of the strategies that are already known, or some of the other strategies that you don't know maybe. I will be telling you what you can do to be successful and buy your first home here. Again, on the previous video that I posted here, EASTAFRI, you already know that I talked about some of the investment strategies that you can do. Some buy houses, some do options and stocks and trading and stuff like that. So today I'm talking to you about top five of financing banks that can finance your mortgage, and then how can you buy your first home very quickly. That's what we're talking about today, and you can only hear that from EASTAFRI TV. Now, number four is CIBC. CIBC is very competitive. Even their rate right now on the mortgage, I think they are offering around 4.19% on a 5-year fixed rate, on interest fixed rate on the mortgage. So CIBC is number four. Can you guess? Can you comment below and then guess number five? So what is number five? So I already talked about RBC is number one, and then TD, Canada Trust, Scotiabank, and CIBC as well. Those banks, I'm telling you, mostly they finance prime customers. Prime customers means those customers who have not much of an issue in terms of credit scores and stuff like that. But if you do have an issue with your credit score and other financial stuff, there is a way that you can get a mortgage with those banks as well, because it depends on the risk, it depends on whatever situation that you're in, your financial situation. They can evaluate everything and then give you guys the mortgage. And if you need help accessing those type of products or accessing this information, I can help you. EASTAFRI is here. You can contact us by going on the website www.eastafri.com. That is our website. Or if you want to give us a call, the phone number is right on the screen or in the description of this video. So I will be, guys, advising you what are the top 5 and how you can access and buy your first house very quickly. Now, number 5 is BMO, Bank of Montreal, because it has a stable insured mortgage. So insured means whenever you take a mortgage, you have to pay some type of insurance. Whenever you have a mortgage and you're paying less than 20% on down payment, you have to insure your mortgage. You have to pay insurance fee for your mortgage for the bank to be able to give you the mortgage. So again, I'm gonna recap those banks. Number 1 is RBC, and then TD Bank and Scotiabank, CIBC, and BMO. So now I'm going to talk about some of the strategies that we can use to buy your first house, your first home very quickly. One of the strategy that Canada has implemented to help people save money and be able to afford a home, buy their first house very quickly, is the first home saving account. The first home saving account is FHSA. That is an account that you can set up and then save money every year with no taxes. You can save up to $8,000 every year with no taxes, up to a maximum of $40,000 lifetime. And then once you reach that, then you can use that amount to pay down payment and purchase your first home. The way it works, there is no taxes on those funds, which means if you are paying, if you're saving $8,000 a year, you're not going to be taxed on those $8,000 that you're saving on your first home saving account. So you can use that. You can set up a first home saving account. You can even contact some of these banks that I'm talking about. Again, it's not a paid advertisement or anything like that. I'm just trying to give you guys the information you need to access the most affordable and most secure product in terms of mortgages that you can get out here on the market. Now, if you don't know how to set up a FHSA, you can contact me. I can help you, or you can contact some of these banks that I'm talking about right here: RBC, TD Bank, Scotiabank, BMO, and so on and forth. They'll be able to help you to save the money and buy your home. Now, another thing that you can do to buy your first home, let's say you don't have a down payment and you're looking to see how you can purchase your first home, you can borrow money from your retirement saving plan. For those who don't know, it's RRSP. That is a retirement saving plan, and it's a tax-free. You can borrow up to $60,000. So the retirement saving plan, whenever you're working here in Canada, the company that you work with or whatever the government, they save money on your RRSP, or you can contribute on the RRSP as well. They save some of that money so that when you retire, they give you monthly payments at the retirement age. Now, If you're looking to buy a house and you struggling to get a down payment, which most of us do because it's not easy to get a down payment in Canada. We have bills to pay. We have many stuff. We're struggling financially and stuff here and there. You're paying and doing this and that, and every time you get paid, all the money goes away because of the bills and stuff like that, and you're struggling to find a down payment. You can borrow the money from your RRSP account, and as long as the money has been there in the account for at least 90 days, then you can borrow up to $60,000, and you can use that as a down payment and purchase a house. Now, when you're looking to purchase a house, get pre-approved first, because once you get pre-approved, they're going to evaluate or your debt or your income to debt ratio, and then see how much exactly you can afford, and then they're going to tell you how much they can borrow you, right? Normally on a mortgage, what they do, they combine, let's say if you are husband and wife trying to buy a house, they're going to take the total amount of your income. They're going to say, let's say if you guys are making $200,000, they're going to say how much of a debt do you have. If you have like income of $200,000, or your debts like credit card, vehicle, and whatever is like $50,000, they're going to take $200,000 minus $50,000. That's gonna be net income of 150. Then they can take 150 and then multiply by 4. That is the amount of money that you can get on a mortgage. They'll be securely lending you that money. Now, whenever you get pre-approved and you know exactly how much you can afford, do not just sit there and say, oh yes, I'm getting my first house because I have a down payment, I was pre-approved, now that's it. No, you have to set up a budget, at least 1.4% or 4% of the cost for closing, because closing, you need to pay a lawyer, you need to pay the inspection, you need to pay appraisal fees, and many other stuff that you pay here and there. So it's very important that you make sure that you do have that budget set aside before you can buy your first home. So now we're talking about the strategies, how you can buy your first home quickly. If you're struggling to get a down payment, you can leverage RRSP. You can use FHSA to save money with no tax, and make sure that you get pre-approved so that you know exactly how much you can qualify for. Pre-approval does not cost anything, right? So the bank is going to tell you exactly how much you qualify for, and then they will be willing to lend according to the pre-approval amount, considering that you stay within the conditions and terms and conditions that the bank is setting. All right, now, once you get a mortgage, for example, if you're paying less than 20%, you have to pay insurance, because there's a company, the name is a CMHC, that is the insurance company on the mortgages, because the bank is taking a risk to lend you the money, so they have to insure your mortgage to make sure that if you default or anything happens, then the insurance is going to cover your mortgage. That is high cost, but my advice to you guys is to, if you can afford to pay 20% more on down payment, then do so. If you cannot, then you have no choice but paying the insurance fees, right? So that is the strategy that I'm bringing you today. First of all, I told you about the top 5 banks where you can get your mortgages, and now I'm telling you the strategies that you can use to get your first home very quickly. You can hear that from EASTAFRI TV, and I'm just gonna keep this video very short. If you have questions, concerns, comments, share, subscribe, do not hesitate. You can call me, you can chat with me. I'll be here to assist you guys. EASTAFRI Consulting is also here to help you secure the financing, mortgage that you're looking for, and even give you some reference on good mortgage agent that can help you access your first home. So thank you everybody for watching. My name is Audrey. For those who don't